Welcome to the Economic Times Global Business Summit DisruptX TV series, wherein we showcase enterprises that are transforming India's business and socioeconomic landscape. In this episode, we present to you a company that is reimagining insurance by focusing on the customer through a diversified distribution mix, market-leading innovations and services, and the use of advanced technology.
Established in 2000, HDFC Life is a leading long-term life insurance solution provider in India, offering a range of individual and group insurance solutions to meet various customer needs as protection, pension, savings, investment, annuity, and health. With around 300 partnerships, the company has a strong base of financial consultants, all focused to make India financially stronger. As the growth story continues, we caught up with some of the management team members to understand the company's approach to empowering its customers to live lives of dignity and financial independence. We had the pleasure of speaking to the Managing Director and CEO of HDFC Life, Vibha Padalkar, under whose dynamic leadership the company has been relentlessly focused on its objective to create value for all stakeholders, including customers, employees, and others. At the helm of affairs, she has been inspiring the team to deliver outstanding all-round performance year on year.
Now, Vibha, as a market evolves, so do its providers or its players, so to speak. So in this segment, what's the key to remaining relevant and maintaining your leadership position in this highly competitive and fragmented sector?
So it's very important that we stay ahead of the game. And there are a few things that we believe is core to our DNA. One is in terms of innovation on product portfolio. What even the customer doesn't know what he or she is going to require by the time we have launched the product. So it's a bottoms up, listening to the sentiment. And this could be a whole host of things, everything right from market indicators, whether it's interest rates or equity markets and what's happening to the economy, to socioeconomic changes. Also, on the other end of the spectrum, such as bite-sized insurance, insurance on the go, insurance with very little of information that is required of you, flexible, modular products wherein you can come in and come out, ramp up insurance and ramp down, increase your cover. That kind of flexibility excites us in terms of new offerings and how the trends are evolving overall. How are buying habits changing, and how do we offer products that make sense to this? How do we also look at ecosystems, building ecosystems wherein there is a retirement ecosystem, there is a wellness ecosystem? How do you build digital communities wherein people can come, share, look at new trends that are happening, and also buy insurance? So all of these things mean that we have to be ready to reinvent ourselves, disrupt ourselves, and then rebuild all over again.
Absolutely. And switching gears a bit, HDFC Life, of course, very recently announced its intent to merge and acquire Exide Life. So I'd love to understand the underlying rationale behind this industry-first consolidation.
This particular opportunity came by, and there are a few things that made sense to us. The first one is a good quality back book. And this made sense to us because this will add about 10% to our own embedded value. Second aspect is in terms of distribution. And there they have fairly credible distribution in the form of agency channel. And agency channel will add about 40% between 35 to 40% to our agency channel. And also their presence in smaller towns, tier 2 and 3 class towns, makes it very complementary to our business. And third aspect is in terms of overall synergies, as well as the DNA of the company, corporate governance, and those aspects.
Now, the pandemic, of course, brought into sharp focus the need for life insurance, which, of course, acts as a risk mitigator in the event of an unfortunate incident. That said, in response to this pandemic, how has HDFC Life gone about serving that need and servicing that need?
The heightened need for risk mitigation, as well as how do they transfer this to companies such as HDFC Life. And here there are 4 large types of risks. The first one is the risk of dying too early or prematurely, which is mortality risk, the risk of falling ill, any major illness, which is your morbidity risk. Then you have risk of outliving one's savings, longevity risk. And the fourth one is interest rate risk, which is woven through some of these other risks. And we worked on these as far as the risk of mortality is concerned. That was heightened during the mortality and morbidity, heightened during the pandemic. And also the numbers clearly in the first quarter of last year during the pandemic, HDFC Life's protection grew by about 50%. And this was also seen in credit life, wherever people are borrowing against that, the attachment rates. We also ran campaigns such as being responsible, also insurance awareness day and insurance life insurance month. Also, what the regulator has come up with, which is our Saral product, Saral Jeevan Bima, wherein evangelizing that insurance does not need to be very complex. However, it is necessity. So please focus on it. Please at least get your basics covered, and so on. So all of those things mean that risk transfer and risk mitigation, to your question, started becoming extremely right front and center of what we do as a life insurer.
Vibha, that makes for a great segue to my next question, which is how would you characterize HDFC Life's corporate culture?
We are a young company. We're just 21-year-old. We've just come into our, adulthood. So we also have the hunger. We have the fire in the belly. Technology is very centered to what we do. Digital as a strategy. We want to try out new things.
Sure.
Because it is important for an organization to have representation from all sorts of people from different background, and that's what enriches an organization. So everything, our initiatives, our policies, processes needs to dovetail into that belief. So we'd like to believe that, the D&I is an important aspect. It's an inclusive culture. So that's the melting pot. And I think that's what epitomizes HDFC Life's culture.
Sure. And how do you see the company's strategic roadmap evolving going forward?
To be the insurer of choice. That is our vision. To also look at how we diversify our business model. And the reason for the diversification is change is a constant. Change is a constant. It's just that the velocity of change, which means how fast change happens, as well as what is the impact of change. These are the things that we don't know, but change is a constant. And so how do we survive and thrive against this change? How do we evolve against the change that is bound to be there, whether macroeconomic, whether regulatory change, whether customer preferences change, and so on. Customer engagement, how do we have customer core to what we do? And we are running a customer engagement massive project across the company. I call it a 10-headed hydra because everything really touches the customer in some way or the other, because that's the reason why we are in this business.
Well, Vibha, by way of closing comments, if there was, say, a young adult who was still on the fence with respect to whether or not to opt for life insurance, how might you guide them? What would your words of advice be for them?
So what we used to spend for a family of 3 or 4 watching a movie and having a meal out could have been 1,000 rupees in a large city easily, right?
Right.
So my point is that just that every month is 12,000 rupees. That will give you over 1 crore of life insurance. It is certainly affordable. Second is that a life insurer cannot reprice it no matter what. So if the premium is say 10,000 rupees for a 1 crore cover, it will remain 10,000 even when that individual who is today 30 is 40 is 50. Cannot be changed. Right? So the sooner one buys it, the better, because the rates are lower. And third, buy it fairly soon, because chances of you not having any illness at the age of 30, 35 are very high. And chances of us having at least one lifestyle illness, unfortunately, whether it's diabetes, hypertension, cholesterol, or a combination, are just multiply as one gets older. Get in there quickly, lock into a rate quickly. And by the time you're maybe 45, 50, if you're fortunate to have been able to create a corpus, then maybe at that time you can review whether you need life insurance to be continued at that point in time. But right now, please don't defer.
We thank you for taking the time to speak to us, and we wish you all the continued success to yourself and the larger team at HDFC Life. Thank you so much.
Thank you so much, Peter.
It's time for a short break, but the Economic Times Global Business Summit DisruptX special series continues on the other side. We'll be right back. Welcome back to the Economic Times Global Business Summit DisruptX TV series. We're in conversation with one of India's most admired life insurance companies, HDFC Life.
In our series of conversations with HDFC Life leadership, we spoke to Executive Director HDFC Life, Suresh Badami, who shed more light on the company's market-leading distribution strategy, brand philosophy, and CSR initiatives.
Suresh, HDFC Life, of course, has an incredibly comprehensive distribution mix with a whole suite and wide range of partners. Give us a sense of the underlying strategy in play here, and also walk us through some of the distribution network's touch points and tie-ups.
Now, the entire customer landscape in India is very, very diverse. We have a very broad geography. We have tier 2, tier 3 cities. We have various regions which have their own context. So the whole approach to our distribution strategy was to have an absolute multi-distribution specialist approach, where we are present across bancassurance. We are present across the tied agency model, which LIC has been following. We do tie up with a lot of brokers and have our own direct model. So we've kind of diversified our distribution to be able to reach out as the best-in-class insurance provider, and then gone across with each of our partners to various geographies. So, there has been a geography level strategy. There has been a tier 2, tier 3 level strategy. There has been an HNI led strategy. And given that we do have the product range which can kind of meet the requirements of most of the customers, we've been able to kind of spread our. So as of now, even as we speak, we have 300 partners, 250 partners on the bancassurance side, almost 50 on the new emerging ecosystem side. And that actually helps us reach out across various regions and cities. We are very tech savvy, so we have done a lot of investments in technology, and we have our own online website. The idea was that we ensure that we reach out to every customer as far as possible.
So much of the conversation in the life insurance space at large seems to be focused around uncertainty. But HDFC Life seems to have made a conscious choice to build its messaging around emotions such as self-respect and self-pride, self-empowerment, if you will. Is this all by design? Walk us through the underlying thought process.
Life insurance for many years in our country has been actually more of a push product. When you've looked at a push strategy, it's been more of a fear factor in terms of you should take life insurance if something were to happen to you. Our approach, frankly, when we came out with the Sar Utha Ke Jio campaign, was more in terms of financial independence, the fact that you can lead a very dignified life. You don't need to depend on anyone else. So both from the savings, and plus you will have the opportunity to take care of your family if something were to happen to you.
My next question to you is focused on corporate social responsibility, because HDFC Life does seem very committed to CSR. So what are its broader on-ground activities, and what are the initiatives it's most keenly focused on?
We are a very, very large private organization, and we run this whole corporate social responsibility under the umbrella of what we call Swabhiman. Now, there are clear 4 strategic themes that we work on right now in the recent years in terms of having to see, what can we do in terms of health and sanitation, what can we do in terms of environment, what can we do in terms of sustainability on education and livelihood, and what can we do in terms of COVID impact. And over the years, there have been a fair amount of effort to actually make an impact on the ground through many programs that we run. And we've gone and kind of had many beneficiaries, almost 2.3 lakh beneficiaries under our program. We have 22 projects which are running. We have 19 implementation partners who we work with. But the idea is that, look, can we make an impact even as we increase the insurance penetration in our country? Is there a way where we can look at specific programs and reach out to the vulnerable sections of the society and actually go and make a difference out there?
So very inspiring words, very heartening to hear. Thank you so much for taking the time to speak with us.
Yeah, thank you so much.
Next, we caught up with COO HDFC Life Parvez Mullah, who spoke about the company's strategy of using technology to deliver superior and frictionless service experience to customers.
Today's dynamic digital landscape, sir, requires consistent investment in one's technology capabilities. And HDFC Life has, of course, enjoyed an incredible tech journey of its own. Its tech edge is really considered to be such a core part of its competitive edge. Tell us more.
The digitization happened almost 10 years ago. 4 or 5 years ago, we set up our digital lab where we hired the startup team, and this team started working on emerging technologies. We got emboldened because of that, and 3 years ago, we set up a data labs team in Bangalore, which was focusing on data-focused technologies. We created a platforms team. We created an ecosystem teams. There are 4 or 5 customer problems which we wanted to solve. And these problems are saying that if the customer wants to onboard with us, it has to be a seamless journey. If he wants to service with us, it has to be frictionless. If he's given us enough data, then we need to personalize the experience, and so on and so forth.
Customers expect anytime, anywhere, real-time service. They do expect a frictionless experience. So how have you specifically leveraged technology to help meet and beat their expectations?
Today, the customer can talk to us through various touch points that are enabled. WhatsApp is our biggest service. We answer almost 400, 500 queries, types of queries on WhatsApp. We've enabled Alexa, we've enabled Google Assistant to answer queries for customers. Apart from the traditional channels of call center and email and the app which services the customer. So there is a 24/7 availability. Plus our branches, whenever a customer visits our branches, we try and ensure that most of the transactions happen over the counter. We've also invested in certain other frictionless services, like, for example, if a customer wants to submit a claim, it can happen instantly. And if it's a pre-decided claim, then we pay out in 1 day's time if it's a non-investigated case. Similarly, if the customer has to do a registration for his mandate, there is a quick registration which is enabled. There is, for our senior citizen customers, we've enabled life certificate through video. There are customers during COVID time who wanted to engage with us through video-based mode. We had enabled video-based service for customers.
Tell us more about the HDFC Life Futurance program and the segment of the market that it's intended to serve.
Yes, so Futurance program is an extension of our technology capabilities. Most of the startups apply to this Futurance program and they showcase the capabilities that they have. We give them use cases, and these use cases could be on medical innovations. These use cases could be on AR, VR, on blockchain, on simplifying journeys, on simplifying the service ecosystem. So most of these startups apply to us, then we filter them. And once they go through the filtration process, we engage with them and we tie up with them and help them grow as well as solve the problem which we are trying to address for the customer.
Thank you so much, Parvez. Keep up the great work and keep us updated on your progress, of course. We wish you and the larger HDFC Life team all the success. Thank you.
Thank you so much.
Next, we spoke to Chief Actuary HDFC Life Srinivasan Parthasarthi, who shed more light on HDFC Life's approach to innovation in the product space and the product strategy.
So given your highly specialized role at HDFC Life, tell us about the products that you specifically manage and what differentiates them from other products in the larger product portfolio.
We were the first ones to come up with an online term product about 10 years ago. And then a year or two later, we came up with a product called Smart Women product, which was exclusively available only for women. And a year or two later, we came up with a product called Cancer Care product, which offers fixed benefits on diagnosis of cancer, both early stage and late stage cancer. And a couple of years later, we came up with a product, a deferred annuity product. And more recently, a couple of years ago, we came up with a product called Sanchay Plus, which guaranteed income for the entire lifetime of an individual. And then a year or 18 months later, we came up with a product called Sanchay Par Advantage, where it had a floor of a guaranteed income, but also had the upside potential for the income to go up because of equities that were invested in the fund. Again, another first mover that we did in the product space was to tie up with our group company called HDFC Ergo, where we offered a combination of their health indemnity with our term product. So as you can see that, we've been quick to identify white spaces and have been first movers in several market segments. So this is what I would say that, sets us apart from the competition.
And life insurance in general seems to certainly enable individuals and families to bounce back from life's uncertainties. So at what age and stage in one's life is it the right time to consider opting for a life insurance policy in your view?
See, broadly, life insurance products are, address two different aspects. So one bucket is the protection from risk category. The second one is long-term savings. So within the first bucket, the protection from risk category, we have three types of risks that we cater to. One is the illness risk, second is the mortality risk, and third is the longevity risk. Longevity risk is the risk of living too long. So as for the first risk, the health risk, what is the right age? And as the recent pandemic showed, you need health insurance at all ages in your lifetime, whether a child just born or you're someone who is 90 years, you need health insurance all through your life. And as regards the second one, the mortality risk, so anyone who is earning, who started earning and has a dependent needs to have term insurance. And the third risk, the longevity risk I talked about, is actually the most neglected and least appreciated risk amongst the population. Typically, people think of retirement planning only when they are in the 40s. But unfortunately, it's usually fairly late because people lose out the benefit of the compounding effect. So I would say that one should start setting aside some corpus for retirement right from when they start earning money. As regards the second category for the long-term savings, and this again, one would start doing it when they start earning.
HDFC Life, of course, recently launched the HDFC Life Sanchay plan, which you alluded to just a short while ago. Tell us more about some of the finer nuances of this plan and what market gap it aims to fill.
HDFC Life has been having a different series of Sanchay products. The new product that we have launched is called Sanchay Fixed Maturity Plan. The USP of this product is it has a single premium option with a maturity of say 5 years or 10 years, which offers a extremely competitive IRRs to the customers, along with the life insurance cover. Plus another USP of this product is it is extremely liquid. So one can take back the money even on day 2 or day 3. Whenever he wants the money back, he can take it. And unlike other insurance products, which levies a penalty on early withdrawals, this product doesn't levy anything at all. In fact, it actually gives some returns to customers at any point of withdrawal, positive returns at any time the customer wants to withdraw this money. So those are the two main USPs of this product.
Srinivasan, thank you for that comprehensive overview, for those insights, and for taking the time to speak with us.
Thanks very much, Pooja.
Well, that brings this episode of the Economic Times Global Business Summit DisruptX series to a close. See you next time.